Hello everyone, welcome to my YouTube channel. Luis here. Let's go over the closing bell at 3:30 right now. So I got 30 minutes. This afternoon we have Palantir, as you can see right now, trading $25.10. Let's take a look over here. See how we doing the save trades. Play not good. This triangle down 192%. I'm gonna take a look at that, see what's the situation. Still trading at $53. The call is should be like 15. So I don't know, probably like not gonna hold this too long, because as you can see, as the days passing by, it's just like I'm gonna lose 100% by the 17th and nothing happening. And I think I'm gonna take a look on volume on that one. Might be low volume. That's the reason that it's not moving. 2 digits. Yeah, 846. Hit a high today at $54. Kind of went down. See how it work in a day. Well, we're either gonna go down to 37 or you're gonna hang it over here at 53, which is really bad. If nothing happened by tomorrow, this gonna go whatever pay me. The thing what's paying me right now is the call side. The put might not having nothing going on. So moving to the earnings, let's get something over here. Come on. Ooh, too long. Okay. Still too long, but that's okay. Let's do crossover. Crossover better. Cross the soul. All right. I don't even know. Okay. Go back in this one. Palantir 25.17. Try to push up. So what I did over here, I looked at the flow. I'll show it to you guys. And I put a Palantir. And that's what we have. We have a bullish side, 175, $13 million against 126, $8 million. So what I did right now, which is kind of like push me what I talking earlier about. Let me see one thing here, guys. Bear with me. See what I have here. Okay. So this is a 35. Okay. We're still playing time. Okay. Somebody just put a 25, 50, 26 calls. This is bye-bye, 50-50, $300 total. 510. So this guy thinks it's gonna go higher. Let's buy one more. Back. So got 2 calls on Webull. How much I have here? here. Yeah, I'm thinking about Data Doggy. Sometimes Palantir, because the Palantir needs to move big time for me to make money. The call side, $35, $9, $26.50. So this guy purchased for $130. $135 now. Okay. So right now it shows bullish, because if I just keep the buy side, take the sell side off, it says very bullish. Now if I put the sell side, it's very bearish. And the sell side, the people probably like, well, people selling put at 23, but they're selling calls at 22. Let's see here. This guy sell call at 317.26, which is, if I bring it to you in the chart, it's well, what I draw here, this big red column, and even right now pops up in the 4 hours a bear position, and the resistance over here at on the top, but probably like they try to sell it, the calls push down. But if you take a look on the weekly chart, this is the weekly chart, and if I move my I draw like a over here. So then we have 26.23 resistance. It's trading right in this. Last time I was thinking like from here I want to go down. It actually went up. I think I can't remember what stock it was that I was trading on this weekly bear. Oh my god! Oh, bear will be over here. Anyway, so the 1 hour. I mean, the only 1 hour, one of the things we have is down here on the bottom, like push the stock up from the 21 to up right now at 25. It's already kind of like almost 8% in the market. It's already like almost pre-earnings. Sometimes this is like not good, but or it's like it's gonna go ballistic from here. Probably back to the 35, which is another 50%. That's that could be good. So let's play 120. Okay, let's take a look on put call ratio options. I don't think we cover that. Let's show it to you guys. Let's do list straddle. Calls on the left, puts on the right. On the money, big number. So right now the put call ratio for this week, it's on the call side. It's on the call side right now. That's the reason the stock's moving. A lot of calls. Let's do the math. So remember, 0.07, it's bullish. Higher, bullish. High is very bullish. 682 divide by 21, 315. So 0.54. So it's bullish for this week. Let's take a look at next week. The 17. Oh, wow. 25 next week is way bullish on that. It's 9,734 divided by 25 strike, 68,853.14. So this also, as they comment, it could be some type of reversal for next week. So while we can do it, but probably the IV right now could be too much. But let's optimize. Let's do direction. Let's do this, the one that PLTR. And let's put a budget for $150. And we have iron condor. Other than that, bullish, very bullish. And the $29 call, buy, sell, 35 to make $500 with 56. And then it's 29. $27 call, 118. Man, what a. Let's go 1 hour to 2 hours. Let's go to 15 minutes. Well, 15 minutes we have my indicators kind of like show that since yesterday we're on the bullish side with nothing so far showing anything as, even like in the 5 minutes, very bullish with nothing show on here. 3 minutes now, whatever. Now it's the 25-23 is beginning to be build a support, and 3 minutes and 1 minute still some resistance building right now, but support all the way up to 25-21, 12. See one thing here. I don't know if. Okay, let's go build. Let's do strangle. What's the IV on the? Hmm, 178. And the put 72. But this is gonna move 15 to 20%. Just don't know what's the IV for a Palantir. Palantir.
The stock she is watching. What's on the radar?
Oh, I got to look at the top S&P 500 stock right now, and that's American Airlines. After Bernstein only hiked its price target by $1 to $22 a share, but that's enough for the stock to climb 6%. They point to growing premium revenues thanks to travelers who want the extra perks like more legroom, early boarding, and they're spending on that. Those premium dollars contribute over 60% of total revenues for American Airlines, so definitely a big driver. Palantir shares, though, they're up, not as much as American Airlines. Oh, no, even more now, up 8% ahead of earnings out after the bell. The options market is implying at least a 14% swing in this stock, specifically this data analytics software name. The focus will be on its AI platform. They call it AIP. It's just AI software. The hope is that it will offset any weakness in Palantir's government business. Scott?
All right, we will see in just a bit. Christina Partsinevelos is going to join us in the market zone as well. Still ahead, Micron shares are powering the semi-trade higher. It's one of the best performing stocks in the S&P. We have details behind that. Guess who's going to do that? We're back on the bell after this.
Okay, that's 14% volunteer and Palantir. So, let's go one up. 14, 13, 106 today. Tomorrow, this is gonna drop big time. 89. So for that, it needs to move. It needs to move like 20% up and down. I go up to 30. Oh my god. 19%. Well, so exclude this one. Wow, it's moving hard right now. Let's go to the 30.50 for $40. And the put. So if I do 30 plus 50, I got for that 41. And let's move down this one. I got 2050. For 23. 123. Yeah. All right. Now it needs to move at least 19% because the IV is gonna drop like crazy. What's the let me see one thing here. See the IV in Palantir for long. Palantir. Let's take a look. Something around the last like July 19 call. 33. $38, 63%. That's fine. I really don't like it. The 7% on the pre-market. Normally, like when the stock don't move, when the stock's gonna move like aggressively after the earnings, it's like it never moved during the day. It just like stay pretty much like right on a in a flat situation. It normally move after big time, but not on the market at market open. Like we have Lucid moving 9% pre-earnings, Disney moving 2.5%, almost 3% pre-earnings. I don't even know if the sound is its earnings today, but let's see. Like I know ARM is gonna move because of NVIDIA and all kind of stuff, and that's normal. Statistics. Even right now, with Out of the money, of course, I don't have day trade on my Weibo account anymore because the IV is so high on those calls that I purchased. I'm making $1 right now profit on Palantir because both was paying me 50 cents right now, but it was at one point it was like $2. So we have 5 minutes away. Let's see what CNBC. Oh, Amazon just dropped 3.5%.
Almost 10 days until CPI. You got NVIDIA earnings. You have a lot of kind of open field here where you can say, all right, the market can kind of just drift and do what it wants and take its cue from treasuries. We're going to have to get through some treasury auctions and all the rest. So it's all to the good. I would say all we're doing is kind of lifting toward the upper end of what now looks like a 6-week trading range, but it's not doing anything wrong. We surmounted the 50-day average on S&P. Banks and breadth to me are the most important.
I mean, this was, you say obstacle course, I'll go with that, but there was like a big alligator pit potential too. We just didn't fall into it, right? I mean, and that's Powell. We thought maybe he's going to be more hawkish, and by him not being, it allowed the rally to get back into business, and it also put the cool on the rates market, and that's the overriding story. If you look at the Russell and financials, for example, playing right into the story.
S&P banks up 6% in like 4 trading days at this point, and market breadth continues to be positive. By the way, tech relative to the S&P peaked 3 months ago. So it's not happening because the same old stocks are adding a ton of market cap and everything else is sitting there.
Yep, chips moving big today. Christina Partsinevelos, what should we be watching?
Well, let's actually start with memory chip maker Micron because it is getting some love from Baird analysts with a new outperform rating. They raised their price target as well to $150 a share. They say memory prices are rising faster than expected thanks to strong AI demand. They also believe the stock's recent 3% pullback that we've seen in the last month is a good buying opportunity. You're seeing shares up today over almost 5%. But the chip sector overall is really seeing a resurgence over the last 2 weeks, and we can show that by the SMH and the SOX ETFs, good barometers. You can see up double digits just in the last 2 weeks, both higher not only on rates pulling back sharply last week, but because of a rotation back into generative AI winners, given all of that CapEx spending that is promised by the likes of Microsoft, Google, Meta, etc. After the bell, Scott, we do look forward to analog chip maker firm Microchip. Mizuho says this name is a cycle rider. I've never heard that before, but I like it, cycle rider. So if you think the worst is behind us for chip demand, then this name is a good play. Bank of America bets any positive results could create a stock breakout. However, they prefer auto-exposed names like NXPI. You can see NXPI up way more than Microchip just in the last year.
All right, Christina, thank you. Christina Partsinevelos. To Phil LeBeau now with what to watch for when Lucid reports. Tell us, Phil.
Mainly guidance is going to be the main thing. Now, look, we'll care about Q1 results and this question, have they been able to cut their losses? This is a company that has struggled to do that quarter after quarter over the last year. What do they say about Saudi investments? They announced a new $1 billion investment in Q1. Do they have anything further to say? And then there's the question of 2024 guidance. Do they change it? They have a habit of changing their guidance a little bit when they do their quarterly announcements. Remember, as you take a look at shares of Lucid, that their guidance right now is to build 9,000 vehicles this year. Do they stick to that? We'll find out when they report their numbers in just a little bit. And don't forget, Scott, coming up during overtime, we will be talking exclusively with Peter Rawlinson, CEO of Lucid, about where they are, especially at a time when so many people are questioning demand for EVs, especially high-priced EVs.
All right, Phil, we'll look for you. Thank you. Phil LeBeau, less than 2 minutes. We got 90 seconds. Mike, I saw a social media post from, a reporter who was out at Milken saying that been here all day, 8 hours, not a lot of pessimism. And maybe that's kind of rare because when you go to these big conferences, a lot of times, billionaires and otherwise, you get a lot of pessimism and caution, generally speaking.
Yeah, there are a lot of people for whom, they have a lot and they're afraid of losing it. And also, it's still at its core kind of a of a bond owners forum when they are kind of warriors. I do think that there's some comfort just in how the overall mechanics of the economy have just not really flagged at all. And so you're able to lean on that. You know, the economic surprise index, there's been some attention on the fact that it slipped negative, but that's only because estimates for growth have come up so much. So we're kind of falling just slightly short versus where we were. I'm not at the point of saying everyone thinks everything is great, because it doesn't feel as if there's a lot of upside enthusiasm in terms of new highs. But you got the volatility index down back below 14. All of the kind of risk models tell you, you can own a little more exposure in that environment.
No one's going out of their way, I guess, is part of the point, to be all negative, right?
That's right.
And we're going to go out with a 1% gain on the S&P here with a little bit of late action. So that's an interesting close to this day. Nicely green across the board. Russell takes the lead over the NASDAQ by just a little. I'll see you on the other side tomorrow into OC with Morgan and Don.
Well, stocks jumping a bit to start the week with the NASDAQ and small caps in the lead. That is the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort, back with Morgan Brennan.
It is good to be back. Ahead on today's show, we've got results from Palantir, Microchip, Simon Property, Lucid, and many more. We're going to bring you all of the numbers as they cross.
Plus an interview with Lucid CEO before he talks to Wall Street on the earnings call.
And another potential red flag for the consumer. Tyson turning in its worst day in months after warning about inflation eating into sales. We'll talk to the company's CFO about today's results and what he's seeing from consumers and customers.
But of course, we're going to begin with the market. More gains to start this week after Friday's rally. Joining us now is Evercore ISI's Senior Managing Director, Julian Emanuel. Julian, welcome. So strong day for the NASDAQ and S&P, up, about 1% plus, led by tech. But you say the major indices are already overvalued and the correction has further run?
So we think, you've been in a trading range for about 3 months now. We think that correction has further to go in time and price. At 23 times last 12 months earnings, you're really very fully valued from our point of view. And when you get to that type of valuation, the average forward return is around 0. Now, that having been said, you look at today's action, and frankly, when you think about the markets on a 12, 24, or 36-month basis, what we saw today and what we've expected will be a part of May is that the names that have been leading have taken leadership once again. The AI names specifically, the momentum names that lost momentum in March and April. This is the beginning of those reasserting leadership. It's just our view, however, that when you think about valuation and you think about earnings estimates, that things are a little bit too fully priced for those names to lead the rest of the markets materially higher in the near term.
Well, one might think, hearing you say that you'd consider the AI names the most overvalued in an overvalued market and have some medium-term caution there. But you say you don't want to sell long-term winners into weakness. You want to buy them. So you actually say buy the AI names on weakness?
A lot of these names have corrected, and we've seen, particularly into earnings, some of the Magnificent Seven had really, taken a hit in terms of earnings, and others had already taken a hit off of their March and April peaks. And to us, when you think about the next, the longer term, these names are going to continue to be the leaders. The promise of generative AI is going to really boost productivity over the long term and is going to be a game changer. So we like not only the names that are the enablers of the technology, but there's a number of companies across various industries who've been forward on implementing AI. Those names are going to be beneficiaries as well.
Yeah, and of course, we're going to get the latest read on AI when we get these Palantir results, which should be coming imminently here. In the meantime, the fact that we've seen stocks rally here in recent days, it really seems like economic cooling, as reflected in recent data, has investors hopeful that this is going to reignite disinflation, spur Fed easing, maybe sooner than had even most recently been priced in, or priced out, I guess I should say, of the market. The question is, how many cuts do we get if we get cuts? And can we do this without materially hurting earnings? Your thoughts?
So from our point of view, we think you're likely to get 2 cuts, okay? If there was a skew away from that central number, we'd say take the under there. Because again, if you think about it, the yo-yo around expected cuts has just been absolutely incredible. And in a lot of ways, the market has shown its resilience by not correcting more in response to these changes. For us, though, the fact is that when you think about earnings, consensus is still expecting on the order of 10.5% earnings increase in 2024. And if the economy is slowing, as the last week or two's worth of data says it is slowing, whether it's material or less so, those earnings numbers are just too high.
Okay. Julian, hang on, because we do have those Palantir results out, crossing right now, and it's a beat and a raise. Earnings in line, 8 cents adjusted, 6th straight quarter of GAAP profitability, but revenue better than expected at $634 million. Palantir raising its full-year guidance to between $2.68 and $2.69 billion. Per LSIG, that's still a little bit lighter than expectations. Palantir also raising U.S. commercial revenue guidance in excess of $661 million. That's a growth rate representing at least 45% for the full year. Adjusted income guidance higher to between $868 and $880 million. Now, CEO and co-founder Alex Karp telling me, quote, our idea that we would have software infrastructure that would take you beyond chat seems to be working very, very well, and we haven't given up our policy of sticking up for the West and humiliating enemies of the West. For Q1, U.S. commercial, this was, again, the big bright spot, driven largely by Palantir's artificial intelligence platform, AIP, the boot camps it's been doing for the last couple of quarters. U.S. commercial revenue up 40% year-on-year to $150 million. It was up 14% from Q4. U.S. commercial customer count of 69% year-on-year, 19% sequentially. The Palantir team telling me use cases that once took months to build using a customer's data, now taking 1 to 5 days. That's leading to faster conversions. In Q1, 136 U.S. commercial deals closed, almost double a year ago. New customers, bigger deals from existing ones. Karp saying this despite a, quote, slow, small, and not the best sales force, sees this as early days of a software LLM AI revolution, also adding that, quote, you have a lot of people kind of repackaging various LLMs. They don't do anything but chat to each other. Enterprises are bored of it. Consultancies are trying to make them useful. It doesn't work because you need an ontology, speaking to Palantir's multi-platforms and different various services and software products. Re-acceleration on the government side as well. That's up 16% year-on-year. Should continue. Palantir recently winning the U.S. Army Titan contract, which we covered here on Overtime. Ukraine and Israel using Palantir software in their wars. U.S. government still the largest customer. But Karp telling me, quote, I couldn't be more optimistic for the right reasons, like we have the best products, and for the wrong reasons, because China, Russia, Iran are not going to stop acting up. And I think the next 5 years are going to be marked by violence, disruptions, and war. I hope he's wrong. Stocks up fractionally. But again, John, it was really U.S. commercial that was the standout this quarter.
Yeah. All right. And in the meantime, Lucid earnings are out. Our Phil LeBeau has those numbers. Phil.
John, take a look at shares of Lucid under a little bit of pressure after the company reported a loss of 30 cents a share in the fourth quarter. That's an adjusted EBITDA loss of $598 million, wider than the $515 loss that many on Wall Street were expecting, but a little bit better than the fourth quarter. So we'll take sequential improvement. If you're a Lucid shareholder, you will see some improvement there. Now you look at the revenue coming in at $173 million versus an estimate of $157 million, so better than expected there. Free cash flow negative $715 million. Lucid liquidity now stands at $5.03 billion, and that liquidity is important for the guidance. They say they have sufficient liquidity to get into the second quarter of next year in terms of production. Their production for this year, they are affirming what they previously gave us as far as guidance, 9,000 vehicles approximately this year. SUV production, the Gravity, begins in the fall, and they are also saying that they plan to start production of a mid-size vehicle in late 2026. Don't forget, we're going to be talking exclusively with Peter Rawlinson, CEO of Lucid. You'll hear him first here before he even talks with the analysts. That's coming up in just a little bit. Guys, back to you.
All right, stay tuned. We're looking forward to it. Phil, thank you. Simon Property Group earnings are out. Diana Olick has those numbers. Hi, Diana.
Hey, Morgan. Yeah, strong beat for Simon Property, the mall operator. EPS came at $2.25 a share versus estimates of $1.38. Revenues of $1.3 billion versus estimates of $1.29 billion. There was an after-tax gain of 81 cents a share because of the sale of Authentic Brands that was completed. Looking at mall occupancy, remember 50% or more of their holdings are in the traditional malls, which hadn't been recovering as quickly since the pandemic as some of the strip malls. But occupancy as of March 31st was 95.5%, an 11% increase compared to March of last year. Base minimum rent per square foot, $57.53 compared to $55.84. So a drop, an increase of 3%. And reported retailer sales per square foot was $745 for the trailing 12 months ended March 31st. So again, a strong beat for Simon, showing that we're seeing some more strength in the mall sector. Back to you guys.
All right, Diana Olick, thank you. Julian, going to go back to you on this because we are starting to see these signs of resilience, right? Whether it is in some of the areas of real estate, going back to the commentary just earlier with you about AI traction and realizing monetization from all the big investments there. It's sort of like pick your poison. Where do you want to start in terms of reaction and all of these different factors that are propelling this market higher, at least for now?
Well, if you think about those three names that you just discussed, you're having disparate reactions, and that has been a function of earnings season. It's as much an idea of where positioning is coming into the numbers as it is the numbers themselves. But I think there's several things to take away here. Number one, the commercial real estate issues are very well known, and the expectation is that there's going to be a sufficient amount of liquidity over the course of years as opposed to months or quarters to help work through this problem without any enormous disruptions. That certainly has yet to be seen. But then on the others, I would say, again, when you think about the themes that make sense long term, the push towards continued deglobalization and the fact that generative AI is going to be a game changer, it tells you where you want to be positioned and the kind of names that are going to make sense long term.
All right, Julian Emanuel from Evercore ISI, thank you. Got some breaking news out of Washington now. Megan Casella has it. Megan?
John, new government estimates this afternoon show the Social Security trust funds that support retiree and disability benefits are set to be depleted by 2035. Now, that is 1 year later than forecast last year, and at that time, the fund would only be able to pay out about 83% of benefits. On the Medicare side, there's a slightly better outlook. The Hospital Insurance Trust Fund that covers hospital stays will be able to pay 100% of benefits until 2036. That's 5 years longer than previous estimates. Now, the Treasury Department says that these upward adjustments are mostly due to a stronger than expected economy as compared to last year's forecast. More Americans are working and they're earning more money, and they're therefore contributing more money through their taxes to these programs. Treasury is also assuming a lower long-term disability rate in these programs, so both increased revenue and reduced costs here are helping extend these timelines. Despite the improvement from last year, though, it's still clear that these programs will have to start paying less than full benefits out to about 70 million recipients in just over a decade, unless Congress makes some sort of a change before then. Guys?
All right. Thank you. After the break, are more cracks forming in the consumer story? Well, Tyson shares getting hit hard as the company raises inflation concerns on its earnings call just days after Starbucks plunged on soft sales. Up next, Tyson's CFO breaks down what he's seeing from customers.
And much more on today's After Hours action, including an exclusive interview with Lucid CEO before he talks to analysts on the call. Overtime's back in 2.
So, in summary, Palantir had on this over here. Let me bring to you guys. Options and Strato. Strikes list.
Welcome back to Overtime. Is there any truth in the Wall?
Just to summarize this one for you guys. So we have like last put then calls, which is it was a bullish during the market. As you can see in the call side, all the contracts hit pretty good numbers, you know, from 200%, 100%, 80%, all the way down to 21% on the call side. And also, like, when I was looking at the, let's see here, the 17. So the 17, it was like same thing, 200%. Some of the contracts up to even like the very little ones, 20. And a 25 strike, still like very bullish. I noticed, I should, because, you know, how can we take the average out of the money pushing to the $20? We have the scenario is changing for next week from the bear side, because the put is going up to 21,000 against 7,000. So meaning like let's see, probably, I mean, on my account from Weibo, I'm probably gonna close even if you hold this 22, maybe if you go down to 22. But the other account, I'm gonna take a hit. See here. Okay, let me see. So the $20 strike straddle, 21,045 open interest. Let me see if that's the open interest. Yeah. Against 7,000. That was way bearish on that. So say the movement's 14%, which is right now, we are, if you do the math, if it was 8% closing and now down 6, so you're down 8 plus 6 is 14. That's what they're doing right now. Sometimes on a to do IV crash, they do that way because they put it like the implied volatility to be like in the 14%, but they increase during the market 8%, and then they kind of almost back to even, as you can see it from the day before. So if you look in the previous close, we trading pretty much from last night closing, from Friday closing to today. And somebody posted here like, congratulations, the call sellers, people that sell the calls, which was Apparently, this guy sold 23 in the last minute, 358. Let's go to live. 359. Sell 27.29 call. 359, 59 sell, 25 call. Those guys, they're gonna make money. Oh, wait, yeah, I might play just this one for tomorrow, the 7th. Needs to go to $20. Well, it's gonna drop this one. Yeah, I gotta go $20. Other than that, because the IV is gonna drop dramatic, even like lower, like 77. So the worst case scenario, because it looks like we're bullish from the beginning, but worst case scenario, we got sell the put in the morning to collect something, and then $64. I should have played Data Dog. Anyway, guys, thank you for watch. Sorry. Still, my other play pretty good. $160. This one, $750. This down 60 because it's not even consideration. It's only down $750. Okay, guys, thank you for watching this video. See you tomorrow at opening.